Welcome back to the show, everybody. We got a great one for you today. Check this out. We have a head researcher who tells us that a collapse for the stock market and a collapse for the dollar, which means, by the way, a really dirty word, hyperinflation, could be here as early as this summer. We're also going to hear from the International Accord, Basel III, and they talk about Ripple and XRP, and believe me, you're going to want to know about it. Let's just roll that beautiful intro.
This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at BackUpBradleyAbove, and everything that we're talking about here today very quickly. 1.6 trillion plus in market cap for crypto collectively. That is a very low number. We need to see that number come back to at least 2.5 to realize the money that's been in this market that is actually left. So just under $1 trillion missing from the market currently. Let's take a look at XRP really quickly at $1.03 right now, up from $1.02 earlier this morning. We're ranging between 97 cents and 109. Now, if we can get above, I believe, the 102, 106 range and stay above there, even with the low side of the range of XRP, I think we can be talking about the further path ahead for those upper price calls of $2.72, $3 plus, $5 plus, $13.33, $27. I think we're all familiar with those price targets that we're looking for. And if we get up above this range, we may be able to have that very real conversation about that. So, all right. Now, looking at this, I want to level set because this is Alasdair Macleod we're going to hear from here, who is going to tell you, as a head researcher from Gold Money, full disclosure, he's a gold guy, so he's obviously going to tell you he's seeing a collapse, but there is a very real element here. We know that there has been massive money printed, and we know that there is a huge problem with the derivatives market, and it's overbought. And when you have a scenario like this of money printing going on, the markets are overbought, at some point you could see a huge correction or sell-off in the market. And in that happening, you could also see the hyperinflation hit on top of the dollar. Now, what we do know, and I want to give you this before I play this very quick clip here, is I want to let you know that we had the U.S. pipeline cyber attacks on the pipelines for the United States. Gas went up. They paid the ransom. They're gone. They got control of the pipelines again. Did gas go back down? No. What uses gas? Every private and commercial vehicle on the planet. If you wanted to begin to price hyperinflation in, fuel costs would be one of the great places to do it. Where else could you do it? Well, in housing. And we know, if you've been following the housing market, that lumber and wood and OSB products have gone through the roof. I can't even tell you the amount of percentage that it's gone up, but I know it's insane. Now, that's 2 points of interest in the housing market and in fuel costs, which affect everything. To me, this is the early onset of beginning to price in inflation in the market, regardless of whatever the catalyst was, be it a cyber attack or not. But let's listen to this very quick clip of Alasdair Macleod tell you what he thinks is coming potentially this summer. Listen to this.
I think basically we need to study the John Law situation and what will happen if this current situation follows that playbook, and I can't see how it cannot. What will happen is that rising interest rates, which I think will be as early as this summer, so in a matter of a month or two, we will start seeing rising interest rates, or alternatively, we will see the Fed trying to prepare markets for the potential for a small rise in interest rates. That's what they would hope would contain it, and maybe some tapering. I'm sure that that's what they will try and do. That won't succeed. The rises that we're seeing in prices, particularly of essential goods such as food and energy, I think puts the whole lie on the CPI statistic, and everybody realizes it. The foreigners will find that the dollar is not giving them returns. You have got roughly 10.7 trillion, on current estimates, 10.7 trillion of foreign-owned investments in the U.S. stock market. Now, so far, that's worked extremely well for the foreigners. But the moment the market turns down, which is really what a popping bubble is, they're going to flee the scene. And they'll have to leave quite quickly. Otherwise, their losses are just going to mount. So you can see there's going to be pressure at the same time on both the dollar and also the stock market. So the two bubbles, as it were, the valuation of the dollar and the valuation of the stock market are inextricably linked. And I think they will go down together.
And there you go. And I mean, look, this is just one person's opinion, but we've been talking about a pay-to-piper moment, just like what he laid out. And it's in the stock market and in the dollar strength. And it's the lack of dollar strength, right? So we could see hyperinflation triggered. And I actually am leaning into the notion because of the gas prices and the U.S. pipeline attack, which they blame on that. Right. But I look at that as them already beginning to price in the hyperinflation to these areas. And I believe that's the place to start. We'll see. Time will tell on us all, won't it? Let's go ahead and take a look at this because time's told on Goldman Sachs. Goldman Sachs used to say that there is no such thing as crypto. Crypto is not an asset class and we're not going to mess with it. Well, that's not true anymore. They are offering it to their wealthiest clients, and they say Bitcoin is actually the new copper, not new gold. Jeff Curry, the global head of commodities research at Goldman Sachs, has rejected the idea that Bitcoin is replacing gold. Bitcoin is definitely a risk-on asset based on Goldman's trading history. So again, they're in the game, right? They went from this isn't even real to now it's in the game, and we're going to tell you what's actually digital gold or what's digital copper in their eyes. Oh, you'd be pissed off about it if it wasn't the fact that you were just glad to see them in it, because you know that it's a huge sign to see these huge investment banks like Goldman Sachs and JP Morgan and the like to come into this space, because you know massive amounts of money is about to pour into crypto, whether it's the new copper or the new digital gold. That's what that means. BondCrypt tells us here is a Hall of Famer. Crypto product provider ETC Group is launching its Bitcoin-backed exchange-traded product on a UK exchange using Swiss trading rules. Meanwhile, Switzerland has established a framework for cryptocurrencies in an effort to become a global center. And that is interesting to me because, you know, the rest of the world is not confused like the United States SEC. And I think a lot of this really comes down with that as to what happens to the escrow. And I encourage you to watch the video I did this morning, if you have not watched it, about the potential of the escrow being the biggest negotiation point for Ripple and the SEC. Looking here, we see from Bull Run Wonka here, CNBC has officially mentioned XRP. It's go time. Yeah, this is something they don't do often. And there it is. And usually what they do is they show this entire graph with XRP missing. You have to ask yourself, and one does have to wonder, why now? This is from iMan, and I want to share this with you because this is pretty interesting right here. iMan shares with us, and this also came from originally, let me just give the credit here where credit's due, from Hall of Famer DJ Peter Vass, who sent this to me. Shout out to you, my friend. iMan says, filed amendment with the SEC by Nationwide BlackRock after the lawsuit. The advisory company for them approved XRP as okay to buy. You go into this right here and you see that it says, in light of extremely complex nature of legal analysis is regarding cryptocurrencies to determine which are securities and which ones are not. Baylor has decided to allow investments in 3 cryptocurrencies, Bitcoin, Ethereum, and XRP. That is pretty remarkable. Okay. So we're looking at that and we realize too that this was done after the lawsuit was filed. Interesting. So they have no confusion about whether they should be buying it or not. And full disclosure, I did pull the actual document itself, and it is right here in this line, which ones or not has decided to allow cryptocurrencies in 3 cryptocurrencies, Bitcoin, Ethereum, and XRP. There is the actual caption. So shout out to iMan and DJ Peter Vass for that one. Here we see that Ripple reveals its plan to achieve carbon net zero within 10 years. Well, maybe that's why Nationwide and BlackRock think it's okay to buy it. Maybe the plan, of being carbon net neutral is a part of the international Go Green effort, which is not that horrible of a notion now, is it? Maybe all of this stems back to the top down, as we have determined that there is an actual proof of rollout that we have determined, whether it's FATF, the G7, G20, right? And things trickle down from there. Or maybe even it starts with Basel III. Basel III was created in 2009 because of the collapse that we saw in 2008. In the credit crisis there, it is an international regulatory accord that introduced a set of reforms designed to mitigate risk within the international banking sector. Now, this sounds like the kind of level of international level that we need to see an agreement on for a new set of payment rails being used and possibly a native token like XRP. Well, hang in there. Because one of the things that's interesting here is this just came out yesterday, and this is Basel III says a gift for physical gold investors. It goes on to say that Basel III agreement will come into force on June 28th this year, in just 27 days for the European banks, and on January 1st, 22 for the British banks. It includes net stable fund ratio requirement. It will make holding unallocated gold problematic. But the NSFR requirement is bullish for allocated gold. According to Basel III framework, gold will become a zero-risk asset. Overall, Basel III will be great for physical gold. Basically stating, as you go through this, and I'm not going to read the whole thing to you so you can breathe a sigh of relief, but basically what they're saying is that it is going to be, you are holding this in account to any business that you're doing, right? So there's going to be full backing basically for the banks that are using gold, right? They want to make gold a zero risk asset, right? That's what they want to do here. That's what this is all about. So this is really about making physical gold worth more, because you're really saying that you are holding all the gold. It sounds to me from this, they want to move away from fractional reserves, right? To where it's like, no, if you have $1 million in there, you need to have 1 million backed by gold. And I may be not giving the best analogy, but it's basically saying they want to put more value on holding the gold, the physical gold, not the paper. Now that's Basel III. Now this leans into the idea and notion that banks have been collecting and hoarding and gathering gold because, and I think I even saw a number in here if I could find it very quickly. Yes. So, the decision to make gold a zero-risk asset was not made yesterday, of course. In 2017, it was announced gold would become a Tier 1 asset under Basel III. The year was marked by central banks' massive buying of gold. 651.5 tons of the shiny metal was bought, a record amount over the last 50 years. This fact serves as evidence that these new regulations will be bullish for physical gold in their opinion. Now, with that being said, this leans into the notion that Bitcoin has been the shiny object talked about for retail investors to buy, right? And they have seen huge windfalls from cryptocurrencies and Bitcoin. But it also has allowed the banks, as you could see from those numbers, to acquire gold to record levels. Now, that's interesting to me because Basel III also has a report that came out in 2016. Now, mind you, this is 2016, but it was just a year after that Basel III and the banks in the international scene had accumulated a record number of 61.5 tons just a year after this report came out. Funny thing about this is return on investment using Ripple and XRP for global interbank settlement. Damn. Well, that's interesting. That's just like the World Economic Forum in January 2020 that shows JPM coin and XRP for inter and intrabank payments and settlement. At what point do we start asking ourselves that these are not coincidences, right? because I don't believe that they are at all. Okay, now we look here and we go into this, and shout out to Michael C. And I believe a while ago it's been now that SPQR Media even covered this information, but it serves us today to go back and take a look at it. Let's take a look right here and start right here on page 8, okay? And it says specifically, Ripple enables the following cost efficiencies. Liquidity. With Ripple, the in-flight time to cross-border legs 2 days is eliminated. The funding 1 day for Nostro accounts still holds. Overall, Ripple reduces liquidity costs by 65%. Payment operations, while local rail payment costs remain, Ripple can significantly reduce staff costs for settlement-related exception processing and trade failures, eliminating 48% of payment operation costs. 48% of payment operation costs. Reduction in expectations and failures and attributable to communication and reconciliation improvement enables by Ripple's solution for cross-currency settlement, Basel III, with no in-flight period for cross-border leg associated. Basel III costs can be reduced by as much as 99%. 99%. That's what they're saying. Now let's take a look at the next illustration here. Institutional cost savings using Ripple and XRP. Now this is the international accord that was created after the last crisis, looking for a solution, obviously, and citing that this is it. Now let's evaluate cost savings to our representative bank using Ripple and XRP as a universal bridge asset. The cost model below assumes our same respondent bank converts 50% of its payments related float into XRP after implementing Ripple, custodying the XRP itself. Banks can either source and custody XRP themselves or contract third-party liquidity providers. Currency hedging is the only cost, with an initial short-term increase due to the potential higher volatility of XRP as a new asset. As XRP gains usage, this volatility is expected to trend downward. In other words, the more people bring their payment flows, the more banks that bring their payment flows hold the asset and use it every day. You will begin to see a downward trend in the volatility because you will start to create a price floor for the asset with the amount of daily payment flows that don't go away. Utility becomes the new watermark for price. International payment infrastructure cost, it shows here, you can take it down by 33% here with just Ripple. The current system is 20.9. Take it down 33% from Ripple and add in the asset and you get the 42% here. It goes on to say, using XRP, even assumingly initially high volatility, our respondent bank can realize 42% cost savings compared to the current system, or 8.8 basis points total on international volume. Using Ripple and XRP further compresses other aspects of the bank's cost structure for cross-border payments. Since using XRP does not require multiple Nostro accounts, redundant liquidity costs are collapsed into a single XRP account. Compared to using Ripple without using XRP, using Ripple and XRP eliminates up to 1 additional day of funding for Nostro accounts, saving up to 99% of related liquidity costs as long as the bank has access to the real-time gross settlement system and the XRP exchange that can support the necessary size of payment obligations. The bank would hold enough XRP on its balance sheet to handle its largest payment and could top up as needed from real-time exchanges. There you have it. That is the international regulatory accord that was put together after the last financial crisis, telling you that XRP is a 99% savings to the banking system. Now, you can ask yourself what's going to happen, but I tell you what, knowing that hyperinflation is on its way to some degree, it's already here. Knowing there's a correction coming to the stock market, I don't know when, but I know it's coming. We see a crisis every 11 or so, 12 years. We're way overdue for this one, right? So something is coming. And it sounds a lot like to me that the International Court for the banking system is recommending that XRP is the answer. That's going to do it for me. Make sure you hit the like and subscribe. Leave a comment below. Make sure you check out link2.com. Everybody, private investing made simple. It's private equity like you wouldn't believe. You know, Coinbase was on here, and there have been many companies that have been on this platform that have gone public since, and I will get a list of them before too long. But Coinbase was selling for like $32 a share when it was on this platform, and then went for 300 and now in the high 200 range. That to me is an incredible buy. That's an incredible place to find some incredible companies and private equity stock. If you're an accredited investor, make sure you register with them and check out what they got. It is a great company with great people. I will catch all of you on the next one.